Palantir stock has declined by about 40% from its February highs, currently trading at around $22 per share. The decline is driven in part by the broader sell-off in high-growth stocks, mixed December quarter earnings, and the expiration of the company post-IPO lockup last month, which has enabled insiders to sell shares. Separately, recent comments by the company's CEO asking investors with a short-term focus to consider other stocks are also likely to have hurt the stock. So does Palantir stock look like a buy after this correction? We don't think so. While the revenue outlook remains quite strong, with the company on track to grow at 30% plus levels each year over the next 2 years, the company's valuation multiple is too high, in our view, with the stock trading at about 28x forward revenues. Palantir is also not yet profitable, despite the fact that it has been around for around 17 years now. Separately, the company is getting more dependent on government customers, rather than scaling up its corporate user base. For perspective, over Q4 2020, government revenue grew by 85% year-over-year to around $190 million, while the commercial revenue expanded just about 4% year-over-year to about $132 million. See our interactive analysis on Palantir's valuation for more details on the company's revenues, valuation, and how it compares with other analytics and software players. You can modify key variables to arrive at your own price estimate for Palantir. February 17, 2021, Palantir Stock UpdatesPalantir, NYSE, PLTR, stock declined by about 13% in Tuesday's trading and is down by almost 25% over the last 5 trading days. The sell-off is largely driven by a mixed December quarter earnings report. Although Palantir's quarterly revenues came in stronger than expected, it posted a quarterly loss. Palantir's revenue guidance for the full year 2021 was also lower than expected, with the company expecting sales to grow at over 30%, slowing significantly from the 47% growth rate it saw in 2020. Although 30% growth isn't bad, Palantir's stock is priced for higher growth, trading at almost 35x forward revenues. Secondly, the company doesn't seem to be reducing its dependence on the government space. Over Q4, government revenue grew by 85% year-over-year to around $190 million, while the commercial segment underperformed with revenue growing just about 4% year-over-year to about $132 million. Separately, Palantir also has a post-IPO lockup period expiring later this week, and this is expected to increase the number of shares available for trading. It's possible that this is also putting pressure on the stock. See our interactive analysis on Palantir's valuation for more details on the company's revenues, valuation, and how it compares with other analytics and software players. You can modify key variables to arrive at your own price estimate for Palantir. January 20, 2021, up to